is the S&P 500 is sitting at the level. It's sitting at what I would call a pretty decisive or important moment for this market. And with unemployment claims coming out in 10 minutes, could that cause a stir? We'll just have to see. Good to see everybody in the chat. Thank you for being here. Shout out to our regulars and welcome to the new people. 140 people joined so far here. We just got started. So do me a big favor. Hit the thumbs up button, do the YouTube stuff, subscribe if you're new, all that good stuff. Let's jump right into some charts. This morning, this is an interesting thing. We've got the S&P 500 bounced back the last few days. And, now I start to get a little bit like, okay, we flushed out a lot of the kind of bear euphoria, if you will. What I mean by that is the people who were bearish or may still be bearish on this market, they got really loud and they got kind of beaten up here just a little bit with this spike back. The reason I say now is time to really prove the case here is that if bears are going to take this thing lower, now they've gotten an opportunity to reload a little bit, right? Two key levels I see for the bears out there. If you're bearish on the indices, right? You've had a little red to start the day. Do the sellers take control of this 57.20 level? Now I'm going to say this, I am bullish, so I'm not on your side. But if the sellers were going to take this, right? And I think that it's worth pointing out, even though I am bullish, this is the spot. If the sellers were going to take it, we would see something like this, right? I would say either here or here, you would get kind of the return of the bear, if you will. If there's going to be any follow through to this move, we are at a decision point. Now, if you're a bull, here's where the decision point can also favor the bulls. If that fails, I would give a strong probability that we continue to go back higher, right? So today is pretty decisive. And if you get a candle that is strongly one way, like let's really zoom in here on the daily for a second, and let's give two scenarios. What if unemployment claims come in solid or we get some sort of conflict resolution between the US and Canada or something on the tariff front that is positive? Well, price action would be really key here. If we get a candle closure that looks like this today, that, my friends, would be super bullish, in my opinion. You're talking about like the Super Bowl, like we're going Super Bowl, okay? Because at that point, now you've broken through this stronghold for the bears and we've broken this bear pattern, right? To be fair, however, like I say, this is a decision point because the sellers, if they take this thing, and let's say you get a candle that looks not like this at all, and instead we do some follow-through activity to what we're doing right now, you get a candle that looks like this today, welcome back to the bears, right? So that's why I'm saying today's a decision point, because depending on how now, if you get a candle that closes in the middle, then we just reset and do it tomorrow, right? But if you get a decisive candle today, and I've been talking a little bit about this recently, a decisive candle, by my own definition, is one that is above the average true ranges that we've recently been seeing. So I've been using this average true range filter to help us better kind of understand if the candle that we are looking at is truly kind of a quote unquote decisive candle. So what I mean by that is take a look at your average true range. We're moving about 100 points, right, per day. So if we're looking at this and we're saying, okay, 100 would be a move of this far. Let's mark this far, or let's just get rough guess this far. If you get a candle that closes above or below those two levels, then I feel like you have a very decisive price action move.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Gold here on the daily chart. I thought about trailing my stop higher, but I didn't quite like. Basically, if we put in a higher high from here, if we take out this high, I'm gonna trail that stop right up to here. I've been trailing loosely. We have a very strong reading on the edge finder, and so I'm trailing my stop loosely on this one. It does play in a role of what I do with my stop losses. When we have a stronger score, I'm willing to be a little bit more loose on it, right? Trailing the stop a little bit more loose. But I wanted to see this thing kind of follow through a little bit more, right? Break that level a little bit more decisive. But what we can admit here, or what we can acknowledge from the bulls, is so far, this wick off the low is a fantastic signal, right? That's some strength right there. You've got consolidation, pulling back and holding. What I would love to see would be to see a follow-through move to the upside for gold, taking out the highs. And I know there's a lot of people who are like, please no. You know, I thought about something before I was going to bed last night. I know what it feels like for traders who are watching right now, who are short gold, and they're levered up massively. I know what it feels like because I've made this mistake in the past myself of being like, the anxiety of that actually happening, stressing you out to no end. And I can tell you from doing this for the years that I have, that anxiety is telling you something about your trade size. It's way too big. I know many people who are listening right now. Picture that I'm in the room with you. I'm talking directly to you. If you are guilty of this, you're not alone and you're not crazy. That's just human experience. But I can tell you right now, if me saying, look, I'm bullish on gold, let's just say you're short. You're short around, let's say you're short around here. You're underwater in the trade, right? And you're like, oh my gosh, I'm stressed out of my mind. This is anxiety inducing. I don't know what to do. I'm stuck in a short position and it just keeps going higher. And then Trader Nick comes on his YouTube channel and he's bullish and he's saying, what if it goes up here? Right? Now, I am not trying to trigger your anxiety worse, right? Because I know how that feels. I know how it feels. But first of all, your reaction psychologically to me saying that shouldn't do that to you. And if it does, your trade size is too big. And that's okay, right? You're a human being. If you're feeling like, oh my gosh, if gold rips up there, that's going to absolutely like blow my account. It's going to be awful. Then your size is too big. And guess what? You do this long enough, it's certainly going to happen like that sometime in the future. And if you don't change what you're doing, you are guaranteed to blow your account.
I've been keeping a close eye on the yen pairs because I'm looking for a lot of downside on the yen pairs, and I've been kind of judging which yen pair I should trade. Euro yen's had a pretty big pullback as of late because euro is very, very strong, so it actually gave a pretty decent pullback. And it came back into a nice area of confidence for myself. Nice trend line, resistance level there as well. I'm looking to see if I can potentially capitalize on another lower high. We've had one over here, second over there, and hopefully a third. I jumped in on the 4 hour time frame on this candle here, which actually was the same candle closure or same time as the daily candle there. So kind of a 2-in-1 there, but I'm looking to see if I can swing it back into the low. I've been pretty bearish in the yen pairs. We've had some nice pullbacks. Euro yen was the best for me, so I'm currently sitting in that position. I'm looking for a pretty big swing. Hopefully we can get to 155 and maybe further as well.
Yeah, the euro yen definitely seeing a little bit of downside, and especially some of the other yen crosses as well. You have pound yen holding up a little bit better. Pound's been kind of strong here recently. You also have Aussie yen, however, though, and Kiwi yen. I have a position on Swiss yen to the short side. specifically built around a concept that we talk about pretty frequently when we talk about yen pairs, which is the carry costs to these positions. Because my approach when I trade FX is a little bit more dollar cost averaging approach, and I can end up holding on to positions for a while. I chose Swiss yen simply because it is of the major kind of currencies, a cross that kind of gives you a more cost-efficient way. And for those who may not be familiar, swap is basically your overnight cost to holding a position, and it depends on the two interest rates offered by the two central banks' currencies or for their currencies. So the reason I chose Swiss yen is because they offer similar currencies. The divergence between them does not generate a huge cost to holding the trade overnight. But euro yen, the difference here, Miko, is you're more you're taking a very specific trade. Do you have a stop loss? Actually, let's pull up your trade one more time on your screen. So you have a stop loss above the highs, though.
Yeah, so 164, 700-ish around.
Gotcha.
Above the high.
Gotcha. Well, the trade's off to a great start, and I think that yen strength could be coming back into the picture. Bonds this morning were up. Yen's up here this morning. That's just kind of showing a little bit of risk-off sentiment, and falling interest rates in the United States kind of supports the Japanese yen. So there's a fundamental story I think that could be playing out here as well. What about the dollar, Miko? The dollar trying to find support here around 103.5. Are you a buyer or a seller if it rips?
Yeah, I'm a seller if it does push up. But
Okay.
dollar has had a really big sell and looks like it's finally finding support. I like how it's kind of rounding off a little bit. So 103.5 looks to be some solid support. But my expectation is that I'm expecting a lot more downside in the long term. I do think there's a good chance we could be coming back to 100 potentially. So from a swing kind of outlook, if we can pull back, that'll give me the opportunity to find some lower highs to get involved in. Not too sure if I will be able to swing it all the way down there, but that's kind of the direction I'll be looking to trade in. So again, a lot of like Euro USD's had a big push, so I'm expecting it to kind of retrace. Not really the trade I'm after myself, but it does look like we're seeing some nice downside there for Euro. Of course, pound looking a little bit less bearish, but it does look like that's kind of getting ready to turn as well. I am trading dollar CAD, but I potentially might close the trade a little bit early because it looks like resistance is no longer holding. I was shorting this one quite a while back, entered on the 4th of March. It's been very, very sideways, unfortunately, but we didn't break through that support, and now looks like price is respecting it. Now looks like we're about to break resistance there. I'm still pretty bearish in dollar CAD, but it might mean we push back to where we came from. So I'll potentially look for some re-entries to get back in for the sell, but I'm only really looking to sell dollar at this moment in time. Dollar CAD looks okay. If Euro USD can retrace, I'll like that one as well. And if pound USD can retrace, I like that one as well. But yeah, those are the only USD pairs I'm looking to trade at the moment.
I have a fun chart to show you that I'm drawing up here, Miko. Let me see if I can switch my screen over. Check this out. So I drew a head and shoulders, right? I'm drawing all sorts of pretty pictures this morning. So I've got a head and shoulders, left shoulder, head, right shoulder. Everybody gets it. The neckline here, right, breaks, and we had the big drop. The reason I wanted to show you this is that sometimes this kind of from the neckline to the head distance, I've seen a lot of technical traders like to take this and kind of measure out where this could go. So if we say at the break of the neckline, if we got an equal distance kind of from that head and shoulders peak to trough, what I thought was really interesting is it takes you right down to this key level, which I think is possibly our next step, the 102 level, if sellers take control. I just thought that was an interesting, symmetry. And the thing about technicals that I think is so powerful is that so often you get these symmetrical type moves. It's almost like the beauty of technical analysis is that it's sort of a self-fulfilling thing, right? It's almost like everybody looks at the stuff, they stare at charts, and they kind of find similar levels and confluence things happen, and everybody kind of trades the same way. So I think that actually is very possible. That would basically be telling you that, okay, we've done this kind of move. If we do get some kind of pullback, maybe we get a pullback into this, but maybe the final kind of resting point for the dollar, maybe it's ultimately headed towards that 102 level. We'll see. But I do think I'm kind of the same camp as you. If you get a rally in the dollar, I think that may be an opportunity for sellers to take back control and move this thing a little bit lower. What I find so awesome and also very cool, just in general, is that a lot of times we do these streams together and you and I are finding similar setups. I mean, if we switch over to my screen for a second, pound and euro are straight up the two on the list, right? That's the two of the currency pairs that, I mean, dollar Swiss bearish, but I don't love that one because the negative swap is awful on that. But, and I know that doesn't sound like swap doesn't sound like it should play a big role, but when you do this stuff year in, year out, and swaps can seriously stack up and really run you a high cost. If I'm bullish on the dollar, I will generally avoid shorting dollar Swiss. It doesn't move a whole lot, and it also costs you a whole lot to hold short. So I'd prefer, if I'm going to get long, pound US dollar, the interest rate differential between the two is pretty little. So your cost of holding, not so bad. Bullish overall reading. Got some retail contrarian signals, people getting really bearish on the pound dollar, trend to the upside, and economic data has been upbeat for the UK. I know we don't get too far into the fundamentals on this channel or on this segment of the show, but I can't help myself for just a second. We've got most of the pound impact factors here, like higher than expected inflation data, employment data that came in a little bit higher than expected. Most of our stuff here is favoring the pound. So that's why it's showing up also on the top setups. And that's why I think that on the technical side, it's also kind of producing this clean chart. I think we probably have the same general idea as if you get some kind of pullback. If you're really aggressive, maybe you're looking at this like 128.75 level, let's call it. I think I'd wait for a little bit more than that if I can get a pullback, but also like euro. I mean, euro coming into, we got the same zones drawn up, and I think that's one of my favorite parts about this segment every week, Miko, is just hearing you and Marco's technical breakdown. I'm like, okay, so my technicals are lining up with theirs, and if I get a fundamental setup too, I'm liking the odd.
So dollar yen back to break even after being in some drawdown. Went from profit, drawdown, back to break even. So that's been a bit of a roller coaster. Pound Swiss is doing quite well. This is a very simple entry off the fib. We've got New Zealand US dollar doing very, very well. We've got the S&P 500 that's sort of just hovering around break even in some slight profit. I actually took the DAX this morning, again off the fib. Very simple strategy that I trade over and over. Not doing too well at the moment, but that's fine. And we've got euro dollar. This entry was pinpoint, actually. It was really, really strong. It wasn't my trade, to be 100% honest. It was the guy that runs this portfolio with me. But yeah, you got a really strong entry right at the highs. So that's really nice. It's paying some bills. Are you in DAX? Yes, I'm in DAX. Imagine I say something incriminating. Maybe I will one day. Maybe you'll get some dirt on me. But yeah, DAX, it's still fine. I'm still quite happy with the trade so far. Maybe just a little bit of an early entry or a little bit too aggressive, but same as always, oversold RSI, fib 50% pullback. Well, sorry, fib golden zone pullback lined up with previous structure slightly. It's not the strongest entry ever, but I was happy to take a go on this one, see how it turns out. Doing very well this month in terms of returns. We're up almost 6%. So I'm happy to have a little bit of a small go or a small jab on the DAX. Okay, James, would you mind looking back at pound Swiss? Yeah. We also had a really nice trade on pound New Zealand that I can show you in a second. I know we had the Bank of England hold rates this morning. But I'll be honest, I've got no idea what's going on there. I haven't looked into it, so I need to do that after the stream. It's on my to-do list. But it seems to have been quite positive for the pound, whatever did happen. Like I said, I know they held rates, but I don't know if there was any tone or anything behind it. We'll see. So yeah, this was the pound New Zealand trade. So I'm looking for another entry, possibly next week on another fib pullback. This was very simple. Relatively weak New Zealand dollar, sticky inflation in the UK. We came down to this 200 moving average, which lined up perfectly with our fib. If we draw that back here, You can see it came into this golden zone, oversold at RSI. Same strategy on repeat, play by play. So yeah, pretty nice trade there. I did cut profits a little bit early, but I'm fine doing that, to be honest. I take a look at the simple strategy. It's been working great with the fib. Shadow, that's great to hear. It is a very simple strategy. It's really hard to get wrong, to be honest, because you just need a fib, and that's pretty much it. And some moving averages if you want them. Sean, AU, are you talking about Australian dollar? I assume that's not gold. Euro Swiss, okay. Yeah, I'll be honest. I think my bullish idea on Euro Swiss is out the window now, just because the Euro pairs seems to be pulling back. So the dollar's gained some strength today. So just natural liquidity flows. We're seeing inflow into the US dollar. It'll be interesting to see if we break out of this range. I think we will, but don't mark my words on that just yet. So as we see capital inflow or liquidity inflow into the dollar, we're seeing outflow of euro, outflow of Swiss, outflow of pound. The yen has also done very, very well. So we're seeing the yen follow this trend line almost perfectly. So we did see some downside on the yen, but my long thesis over the next, sort of year and a half is intact. The market's also reflecting that at the moment. My RSI strategy. Hans, if you want my strategy, you can go onto the Elite Traders website and fill in the email. You get it for free in your inbox instantly. But yeah, I'll cover it here simply. So essentially, we just wait for an oversold or overbought RSI, depending if you want to buy or sell. Length of 6, we've got an upper band of 80, lower band of 20. So if I'm looking to buy this market, I would buy it when the RSI is oversold, or I would sell it when it's overbought. But then I mix that with global macro. I'll mix it with trends using the fib. Using moving averages. I'll use the fib to gauge pullbacks. So it's not just an RSI. Obviously, it has components going with it. Can you go back to the DAX? Yeah. What do you want me to do on the DAX? I'm still pretty bullish on the DAX actually, but yeah, we'll see if this trade works out. It doesn't look very promising at the moment.
So we've already gone past the expected move on the day. If we just settle in a little bit, then I can hopefully turn a nice little profit on my SPX trade. Which, it's not that far off though, but 57.10 is my SPX trade. So I got to see how the day unfolds. But I'm not upset by watching this market go higher. So going back to this chart here, I've called the symmetry level, meaning this low, high, higher, low, higher, high. That is right around 57.95. Go back to this previous low. That's right around 57, right around 57.95 or 57.80. Looking at these fibs, the 50% pullback zones around 58.20, 58.25. So I think that the market somewhere in here is, as we come into the end of the quarter and into April, this is where the bulls and bears are going to fight. I think the bulls can, try to maintain, but if we have heavy amounts of volume that come back in and defend this level, the bears can certainly claw right back and take this thing back down to the lows. So this is kind of what we talked about the last week or so. If we have a risk on move, I think I'd be pleasantly surprised to see the market go higher, and I would be fully expecting the market to come back and retest the lows. Okay. All right. So we'll see how the day unfolds. But on the right-hand side of this little trend line and a correction, not a bad thing. News-wise, things are pretty light today. I saw that President Trump is on the calendar here for 10:40 a.m. But from the looks of it, it sounds like either a recorded session or something very scripted, but it's a digital asset summit in New York via satellite. So it could just be a canned speech. We'll see if there's any headlines that stoke anything. If Bitcoin makes a run, okay, maybe. So let's just go top down and see what we have today. So we're up around 0.5% on the SPX, 0.47 on the SPY. Equal weight's up a little bit. NASDAQ up 0.62, Q's up 0.60, Dow's up 0.4. You know, again, all the charts look pretty similar. We had a big slide, so I just took a fib from high to low. I'm looking at this like 38. I mean, the nice thing from today is if we're getting above this 200 moving average, okay, or we can even change this. If I add in a, let me add a simple moving average. So I'll go simple moving average. Okay, and it gives me a bunch of them. So let me just go into the settings here. All I really care about is I'll change SMA 1 to a 200, and then I'll get rid of the other ones. So SMA 1 is all I really care about. There. Okay, so let me make that a little bit larger just so you can see what I'm talking about. There. How does this not extend further right? Interesting. So it just ends? Make it the same color, I guess. There, okay, there we go. Now we got it. So now we're caught up to current price. So a couple of things. One is we're sitting around the 200 moving average right now on the exponential. So this is the exponential moving average in red, and we're sitting right at it. So a close above and a close above this 30% retracement level to me is an encouraging sign that we come back up into the 38, possibly the 50% retracement. So I think two key levels to be watching. I know this is like getting into the granular details here, but right at this EMA and right at this SMA, this would be where I'd say resistance could certainly lurk. Okay, so if we can get above this 200 EMA and we get above this 30% zone, the 382 is sitting right there with the simple moving average just slightly higher. That data point is around 573 to 574. See what I'm saying? Like we have a break of the moving averages, and so if price comes back up to test the moving averages, whether it's this one or this one, and then show a sign of rejection, that wouldn't be a huge surprise. That is the big obstacle right now for the bulls, is to get back above these moving averages, because for all these years, right? For all these years, we've seen this 200 moving average act as a really dynamic support level. When it's in a bull market, it is way out of the way. When it's in a bear market, it is resistance. So our 2022, we were above it and then got back below it, like it stayed in a downtrend. You can see its resistance there, became support over here, became support over here. It's been a while since we hit it, which is why we weren't surprised that we ended up going bearish and finding that corrective zone. But this is a tricky spot, because if we're through it, we could pull back and just, sniff it out again, find that structure, and I could see the bears flushing down again. Some content I soaked up yesterday, some pretty smart investors that I follow talking about a potential bullish rally in a bearish market. So that's certainly flipped the landscape from, cautiously bullish and cautiously optimistic into now a bull rally in a bear market. Now, whether that is true or not, I mean, one thing that can happen that not a lot of people talk about is the market can go sideways, right? I mean, this market may not go to highs or lows. I still think that this level, I mean, I'm reading more that like, oh, the Fed put and the Trump put is way lower than current prices, and maybe it is. One thing I want to look at, and let me see if I can go. I got a screenshot up from yesterday. So, what was that trade? Oh yeah. Let's see here. I want to go S&P 12-month EPS. S&P 12-month EPS. See if that pops up on a Y chart. Hopefully I don't have to. So 75. That's not what I want. So what I'm looking at is the earnings revisions that have been happening are the reason that we're kind of seeing the markets fall. So earnings revisions, if they are going, like earnings are forecasted up, but the actual S&P is up here. So having this market drop and come back into line with the forward price earnings is making sense. Like that's when you say, hey, the market's overvalued. It is, it was, and this reality check is typically what happens. Despite all the noise of tariffs, despite all the noise with Trump and co and the Fed and the uncertainty, the reality is this market operates typically in an environment of earnings, right? Earnings are solid, earnings are consistent, earnings are growing, earnings are trending. Well, then the market should stay right around the real value of earnings. But if this earnings starts to dip lower, that's where there could be some more catch up to go to the downside. So just something to be aware of. All right, let's continue to go top down. Let me catch some comments here. Let's go to the Dow. Same thing, high to low, pulling back around that 38% zone. So 38%, 50% zone. We'll see what happens. This could be a broadening pattern on the Dow. I actually have some long positions. It's not really broadening pattern. I guess it's a channel because we did not make a higher high there. But watching closely. But if we go, high, low, lower high, lower low, like that's a pretty scary spot to be for the Dow. If we break below, again, April lows, August lows, we break below this area, the concern is that this becomes a very real scare. That would be my next major level support. If we don't hold in this level around April lows or August lows, then we're talking this 5-period yearly moving average, which is way down here. So I just want to be aware that this market might be able to drop 19%. I want to be aware that the S&P and the NASDAQ could drop 20+%. So if we're talking like nasty legs lower, this market can slip from a 10% correction into a legitimate like 20% scare. Whether that scare is sustainable, whether it's a scare is a bear market, whether that scare is going to be a full-on recession, we haven't really felt the pain of a full everything is down, everything is bad recession. Right? I mean, that was 2008. Everything was down. 2022, like stocks were down, but we had certain sectors that were resilient. And so I'm wondering if that's how this year possibly plays out, as we have kind of a rolling recession where certain things hang in there, more defensive plays, more dividend plays, more low beta plays, but we start to see just more pain on the growth and momentum side.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.